Good morning, everybody. So, my name is David. I'm from the UN, and you're probably wondering what the UN is doing here. And that's probably a good, valid question. But I'll give you a bit of a history, not necessarily about me, but really why I'm here. And then we'll talk a little bit about what the UN's role is or what it wants to do over the next 15 or so years. So I'm Canadian. I grew up in a small, poor farm village in Canada. So I learned what it was like to be poor, but I also learned what it was like to have a very strict mother who sent me off to university and made sure that I went off to university. So my first job was really a floor trader. This was before the digitalization. So I was a commodity floor trader. I actually traded on the floor in Chicago, Japan, Toronto. And then I ended up in Europe, and I worked in Europe for 20 years, corporate finance, for top three different sectors as well. Really looking, buy a company, build a company, buy a brand, build a brand, this sort of background. And then I joined the startup phase, the first .com in Europe, not in America, in Europe, and got lucky. So really working from a floor trader, really understanding the sort of minute details that's involved in trading, especially commodity trading, when you have to look at politics and weather and all sorts of different variables as you're making currency, as you're making your investment decision. And then moving into corporate trading, very structured from a corporate standpoint. And then doing the startups, a lot of technology, crazy environment. And then for the last 10 years joining the UN. And I've been lucky enough to have sort of the portfolios on the edge, if you will. So I ran digital, I ran innovation, technology, and now social finance. So when you look at, through this course of my journey in that sense, I'm a hybrid. I really am, by accident, I really am a hybrid that sort of went from sector to sector, from different types of organizations, and now ending up with the UN for the last 10 years, understanding development and what that means. Especially I'm based out of Bangkok in Thailand, so I work a lot with the Asian countries to really understand now this East versus West perspective on investment, because I do believe they have different lenses when they're investing. So with the UN, and we did talk about a lot about this morning, I'm really quite excited to hear the discussions this morning, because it's at the right level, I believe now. And the SDGs are starting to come in as that framework. But when we look at the SDGs, and this is a discussion we have at the UN, but also I have a lot with the investors and through the investor networks in Asia. When we're looking at the SDGs that are going to end up around 2030, and the question really comes in with the SDGs we're talking about today and what the SDGs are going to be like in 2030, because that's when the SDG period will end. And that world is going to be a lot different. So when you look at the different coefficients, and you can read I won't read off the slides, but you can read off the slides, but there are going to be some major upheavals. If you look at the sort of the meta intelligence that's coming in over the next 15 years, some major differences. In 2030, we're going to live in a very different world than we live in today. When you look at some of these numbers, first person to live to 150 years old is already born. And this goes for a lot of the children, a lot of your children. Your children have a very good chance with medical advance to live until the year 2100. And that is going to be a major difference. So the decisions that we look at making today, specifically within the UN, but also as investors, also as governments, policymakers, have huge impacts going forward. When you look at jobs and what's going to happen with respect to automation, robotics, bionics, there are going to be some incredible changes. So when we're looking at making investment decisions and how we define impact today, even using the SDG framework or some of the other great frameworks out there, GIN, GEARS, looking at the other frameworks, we have to start looking, especially if you're working on a 5 to 7 year investment period, how that's going to change when you're structuring your investments or the portfolio of investments that you want to make. Climate is one of the bigger discussions going on, climate mitigation, and how you sort of perceive that. Also oceans, food security. Some of the SDGs really dig into some very interesting investment proposals that are being done right now. And I think these are some of the things we have to think about. So tossing the SDG framework around as an interesting value statement, it actually, when you start to look at the world that we're moving into and the investors that we want to sort of help crowd in funding from the capital markets into impact investing, whatever that will mean in 5-10 years. These are some of the sort of heavier decisions that we really sort of have to ask these questions now. And this is one of the most interesting things. You probably all know Ray, but he came up with this statement about 4 or 5 days ago, just sometime last week, where artificial intelligence and human intelligence are going to be at par by 2029, before the SDG achievement deadline. And what does that mean? Cliff talked a little bit about it. John from Goldman Sachs talked a little bit about it. But when you look at some of the advanced technologies, artificial intelligence, machine learning, the advanced math, and what that brings in. And then you look what the World Economic Forum says, just in 2017. Human values are going to be tested to the breaking point. The SDGs are based on the values that we see over the last 5 years. It took quite a time to come up with the SDGs. Now, if human values are going to come to the point of breaking, what does that mean for the SDGs? Then what does that actually mean for impact investing as we go forward? So I think a lot of this information now is going to start becoming very pertinent to the capital markets, the millennials, if you will, the younger investors. There's a huge transition in family offices, moving from patriarch-led family offices now to matriarch-led family offices that have a different value system. There's a huge shift from legacy wealth in the West to newly created wealth in the East, where a lot of Western wealth has been around for hundreds of years. It's got a lot of history, a lot of habits, where a lot of the new wealth doesn't. A lot of the new wealth in Asia, a lot of the investors I talk to are quite open to new approaches, quite open to new ways of looking at investment. They're very, very concerned about the second generation of wealth in Asia, about how they are going to become responsible investors. So there's a lot of things happening when we look at going back to the SDGs, when we talk about the aspiration to achievement and all the different breakdowns. And that sort of was a situation when I discussed with the United Nations, specifically UNDP, about how we want to take social finance. What is the role of social finance in an organization that has been seen as a behemoth, dated, a dinosaur, and losing its relevance as we start to look at development? China alone has brought 700 million people out of poverty by simply using market dynamics, economic legislation. So what does that mean when we look at countries like Korea, Singapore, and how we're going to move Asia forward, how we're going to move Latin America and Africa forward? So there's a lot of different concepts when we design what our perspective on impact investing. So we'll talk a little bit about the United Nations Social Impact Fund. So we just became legitimate. It took about 4 years talking with UN Legal to go through the process. A lot of great lawyers at the UN. And most of them are human rights lawyers, so they didn't quite understand the market dynamics. So, but we went through the process and everything else, so we became legitimate in November of last year. Christmas being a wash, we started really becoming active in January. And the focus is really around looking at 3 different areas. So when you look at from the bottom there, it's really supporting, sort of taking a systemic approach. So it's supporting the ecosystem of really how we're going to bring this together. And when you look at that, if you look at any change movements, change doesn't happen linearly, never does. So it takes a matter of going between the different sectors. So working with social entrepreneurs, understanding what venture impacts are, concentrating on the financial structures behind impact investing or just pure investing, and how pure investing or the capital markets can really influence impact investing. How do we crowd that in? And then also looking at policy. So this is sort of our work plan as we go forward, as you can see. So we are part of the Sustainable Finance Collective Asia. which is Credit Suisse, ING Bank, FMO, and us. And it's a platform where we evaluate together proposals that come in through the platform, specifically in Asia, ticket size between 5 and 15 million, 15 million up. And we evaluate them, and you can understand the complexities of the discussion, but the richness of that discussion with Credit Suisse and ING Bank come from a different perspective. FMO, which is the Dutch Development Bank, and the United Nations, so my team, and how we look at evaluating not only on the economic returns, but also on the impact returns. And having that discussion has been a very, very fruitful discussion. We're about to launch our first fund. I won't go into too much detail about that. Only to say that it'll be a large fund, probably about 200 million plus. It'll be a blended value, or sort of a blended finance fund. So there'll be a portion of grant that will go support capacity building, technical assistance. And I believe this one, most of it will be equity. We've got a large network of investors, mostly Asian investors. But there's a lot of, as you know, the Asian market is a very disaggregated market, which disaggregation only creates gaps, which only creates opportunities. So it's a very opportunistic market in Asia at the moment. And then when you look at some of the major challenges between policy, and this is one of the major things we see right now, that a lot of governments, especially in Asia, just simply don't have the policies to incentivize impact investing. I wrote the ones for Maldives. I'm currently writing the ones now for Thailand, working with the Treasury and the Ministry of Finance to write their social enterprise and their social investment tax incentives, going through these structures. And I'm in dialogue with China at the moment. In China, it's either for-profit or no-profit, and they want to sort of create a market in the middle. And what does that mean for a country like China to do that? So UNCIF actually works, again, with investors, investees, structuring the fund so as an intermediary, but also on the policy side as well. So helping governments come to terms and how to look at it. I think my perspective personally, governments are simply impact investors. They're very bad impact investors, but they're impact investors all the same. And they have a very hard question to ask themselves between economic growth and providing a public good. But in the sense where all their tax receipts and sovereign funds that they have, they are simply, again, impact investors. So when we look at the theory change behind it, everybody knows this is how you make money. But what I really had to talk to the UN about, because they work on theories of change, is really what is that theory of change behind impact investing? And it really sort of comes like putting a layer of impact on top of your investment, or designing it inside your investment, depending on where you are in that investment cycle. And really working with the different audiences. And this is something that the UN does very well. It convenes. It brings people into a room. It brings people into a room that shouldn't normally be in a room, helps them to dance, plays a little bit of music, and they start to work together. So this is sort of the purpose behind, UN and UNDP being involved in this. But what it really comes down to is really around this. So you're trying to build resilience, and profits is resilience. If you can create an enterprise, an impact enterprise, or any enterprise that's profitable, it has built-in resilience, business continuity, and that's what all businesses are working towards. They want to remain relevant in their markets. To remain relevant in their markets, to prove it to themselves, they make profit. And as long as you continue to make profit, especially if you're maximizing it, you remain relevant. And then obviously you get sustainability. This is something that the SDGs are all about, sustainability. So on the impact side, we look at sustainability, really maximizing, catalyzing the impacts that we can provide through investments. And then in the middle, then you get a socially responsible enterprise. So this is sort of the approach that we're taking moving forward. And these are some of the areas that we look at to invest. And as you can most likely see, a lot of it's heavy on technology. And I'm a firm believer, especially when you go to places like Shenzhen, the Valley, some of the areas where you look at technology. Technology is going to have a huge impact for citizens. And if you look at the technology it's producing right now and sort of take a citizens first approach, as opposed to a consumer first approach, take a citizens first approach, then you can really start to build impact on, especially when you're looking at VC plus PE level of investing. So around these areas of investing. And I think this is where the big opportunity is. This is the area that we want to move into. So things like IoT, Internet Plus, as they call it in China, and how that can be built into even things like infrastructure, looking at large infrastructure. And just to give a very quick example, we're looking at an investment in India. Two of them, actually. There was a off-grid investment, off-grid energy investment and low-cost housing. So what we're going to do is sort of look to combine those two investments to make it a larger, sort of a smart affordable housing project. And we're getting a lot of interest from investors. So I think the design is going to become very, very interesting for impact investing, how you can design and take a little bit of a biz dev approach, a business development approach, not a VC approach, more of a business development approach to designing investments that are very resilient in the marketplace, but also can produce very high catalytic impact, game-changing impact. UNCIF in itself, we're not meant to be a market player. The United Nations takes no profit. We cover our costs, but there's no profit for us. The investors will make their profits and our partners will make their profits. Our goal is the impact, so we really sort of watch the impact. But we structure it very close to the capital markets. We work with GPs. We sit on investment committees. We negotiate parts of the front and the back. So we are actually part of that cycle. And I think the only way that we're going to convince the capital markets is to play on their field by their rules. We have to look at the investment, the question that we have with vocabulary. Clearly the UN and the private sector have a vocabulary issue. But when we start to look at impact investing to investing, we got to sort of narrow that language, and we got to start using the language that investors are very familiar with. So these are sort of the approaches and the slight approaches that we're going to take with United Nations Social Impact Fund. And over the last slides, as you saw, when I'm talking about technology and some of the major disruptions coming in, anyone want to finish this? It's very clear. If you want to see disruption, don't go to conferences. But this is the challenge that, and you'll see that, and this is what I hope, the challenge over the next couple of days, to ask the hard questions. Impact investing is about to go mainstream. And the way that we build our relationships and our network partners with the World Economic Forum and some of the major banks and major investors, putting the academic consortium together that really is going to do rigorous research to try to figure out how do you understand a unit of impact, and where does a unit of impact relate with a unit of return. So some of the advanced math and analytical frameworks that we want to put together. So ask the hard questions over the next couple days, and don't be shy about people sitting on panels and that, because I think we have to get over this hump, where we have to get the language has to become a little more narrower. We have to understand who we are, what we want to do, and then how we relate to the capital markets. Because I think it's only at that point where we can convince the capital markets, that huge trillions upon trillions of dollars, to start looking and using impact simply as another variable in their investment decision. If we can make straight line investors more informed about the impact, about the investment decisions that they make, not only on risk and return, but including now value, social value, risk and return, including that variable in their normal dialogue, then I think then they will make better and much more informed decisions. And much more informed decisions for their clients, especially off their clients' balance sheets, but also their own decisions. And I think that's where we're going to have a big change coming forward. And this is it. I'm going to play just a very quick draft of a video, just to have a quick understanding.
From outer space, astronauts say that our world looks fragile and lonely, with soft white clouds covering the blue globe. But taking a closer look, the fingerprints of mankind's rapid expansion on our planet appear, an interconnected world that fuels increasingly complex challenges. Climate change, urbanization, poverty, threats to health and to human security. Unfair distribution of benefits caused by unequal access to human rights affect people all around the world. From all the way down here, what can be done? How can we continue to grow and at the same time spark real change? The Sustainable Development Goals have been set, but now it's time to get to work. The United Nations Social Impact Fund is a new multi-partner financial and capacity-building platform that bridges entrepreneurship, social innovation, and blended capital to create sustainable economic and social returns. Our goal is to support and scale up these businesses to create bigger impact. The UNDP Social Impact Fund combines grant, debt and equity into blended financing for SDG-aligned investments. Infrastructure plays an important role in development. Better infrastructure boosts connectivity and enhances efficiency, growth of business, trade and commerce across borders. But the World Economic Forum estimated a global infrastructure gap of $1 trillion per year. A huge funding gap. And when it comes to green infrastructure, the gap widens even further. But the world needs to move to renewable energy infrastructure and sustainable transportation to fight climate change. Technology can help us in creating solutions. By 2015, between 15 and 25 billion devices have connected to the internet, which enables the connection of people, processes, and data. IT solutions can solve real-world problems by generating data, processing analysis, and creating results that can improve people's lives. From data mining to virtual reality, from artificial intelligence to advanced satellite imageries, from robotics to drones, technology continues to evolve, and its ability to affect positive change has grown exponentially. We've seen applications in areas of much relevance to society, such as health, education, and disaster response. The UN Social Impact Fund is building the networks to act as a catalyst for the global movement of social impact. The new partnership architecture fosters collaboration amongst governments, businesses, investors, and philanthropists. Now is the time for all of us to work together for real sustainable change. Not only to survive, but also to thrive.